Sachin, what seemed to be the mood of the market? We should be jubilating that Brent is below 100. That doesn't seem to be the case. What to your mind is playing out?
Yeah, hi. Thanks for having me on the show. So, yeah, I agree with you that actually for us, the last man standing as far as the commodity prices are concerned, because the kind of the cool off that we've seen in all the commodities that was missing in the oil prices, but that seems to have also seems to be cracking now. So yes, it's very positive for the Indian economy. And my sense is yes, the Indian markets will take cognizance of that. And probably today the mood might be a little bit sober because of the just global markets. Like last night, if you see, the US markets were very positive, but they ended actually a bit negative because of whatever recession fears and so on and so forth. And probably also after many days yesterday we saw some decent amount of selling number from the foreign institutional investors. So that might play around the minds of the investors or the traders at this point in time, but it is likely to be short-lived, and we should see the mood getting positive sooner than later.
Hmm. Sachin, India inflation number coming in 7.01 versus 7.10, what the street was actually estimating. And tonight, the US CPI would be coming in, though the entire world actually expects slight, uptick. But do you think yesterday's inflation number here in India, today's inflation reading actually broadly could be the peak, and from here on, inflation is starting to moderate? As a market participant, what's your take?
No, I definitely would like to believe so, because all these numbers that we're seeing are probably on the data points which were probably a couple of months back, or at least a quarter back, or maybe 6 months back also. But in the last 2 to 3 weeks, we've seen a dramatic change when it comes to most of the commodity prices, be it ferrous metals, non-ferrous metals, across the board, even precious metals. In fact, even a lot of softer commodities, the agri commodities have also today, all of these prices are pre-Ukraine war prices. So, what was existing, the prices which were in January, February, those prices are back after almost 6 months. So clearly the worst of the inflation seems to be behind us. And as I mentioned earlier, the last man standing, which is the oil prices, also we are seeing a decent amount of crack there after, I think, a good time frame. We are seeing oil probably decisively below $100. Uh, so inflation, the worst definitely seems to be behind, and which definitely was one of the very, very headwinds for across the global economies, and definitely for Indian economy also. So I think that definitely should, that haziness is probably out of the way.
Hmm. Right. Okay. So how are you playing this topping out of commodity, uh, point or angle in your portfolio? Be it agro commodities, so consumer stocks, some of them are excited, or even industrial commodities, the users, auto industry, capital goods, many others. Do they find part of your portfolio?
Yeah, so definitely. See, we strongly believe that Indian economy is actually going to do very well. And when generally, the backbone of any economy is the financial services. So we believe that the banking and the financial services would actually do very well. So, and within that, obviously, the private sector banking uh, has been doing very well. In fact, you can see now the credit growth numbers have also picked up quite a bit. In fact, they are now in almost double digit for many weeks now, almost at 12-13%. Clearly the profitability of all the banks should improve now that uh, they have already cleaned up their asset quality much earlier. So the credit cost will also remain under control, and plus their NIIs will increase as the credit growth is increasing. So private sector banks, somebody we believe should do very well as the economy picks up. The second big sector which actually gets benefited a lot is on the discretionary spending side, which is the autos. So obviously lower commodity prices, higher disposable income, as we have seen, the wage growth has been one of the highest in the last so many years. BSE 500 companies. The wage growth or the salary expenses has increased almost at 13.5 to 14% And if you take only the manufacturing companies, it's almost up by almost 14.5 to 15%. So, this kind of higher income levels in the hands of the consumer should also help in terms of the spending side. So autos should also do very well. Also, really, because of the supply chain diversification that we are seeing in the world, and because of the geopolitical aspects and all of that, the export side should also pick up very well. And of course, within exports, there are certain sectors where India has certain strengths, say be it chemicals, pharmaceuticals, engineering, electronics. So some of these sectors also should do very well. So we are really positioning our portfolios in these few sectors at this point in time.
Hmm. Right. Sachin, just one last word. Uh, how is the earnings picture looking for portfolio next 3 to 4 years? Are you confident that the portfolio level earnings could pan between 15 18%, or is there need to be reworking them on the lower side?
Well, this question was probably really worrying us maybe about, as I said, 3 weeks, 4 weeks back when the commodity prices were so high. Clearly, that would have impacted our earnings side, profitability. All of that would have gone probably toss. Even probably that there could have been demand destruction. So even the top line could have gone for a toss. Right? But now that the commodity prices have cooled off so much, like if you see, copper has come down from almost 10,000 plus to under 7,500. Aluminum is 2,500. Steel has corrected by 20% plus. So all of this really gives us comfort that there will be a there should be no demand destruction. Rather, the trajectory as far as the Indian economic growth is concerned should continue. And with this kind of raw material prices, companies should be able to maintain their profitability. So we believe, yes, 18 to 20% compounded growth over the next 2 to 3 years is a high probability.
Right. All right, Sachin, we'll let you go on that one. Thanks very much
Thank you.
for chatting with us
Thank you.
today. Let's take a short break on that note. More news and